Shares of Boeing under a bit of pressure this morning. Reports the company is the latest name getting caught in the crosshairs of the trade war with China. Phil LeBeau has the story for us. Phil.
US President Donald Trump has remained firm that China must be first to step up to the negotiating table on tariffs. Beijing has reportedly blocked further deliveries of Boeing jets in retaliation to Washington, D.C.
We are now witnessing one of the most alarming episodes of recent decades. China is halting deliveries of Boeing aircraft. What does this mean in practice? A massive multi-billion-dollar industry built over decades is now on the brink of collapse. And behind the dry numbers lie jobs, international contracts, and the fate of thousands of companies on both sides of the Pacific. What is behind China's decision? This is not just a temporary suspension. The Civil Aviation Administration of China has explicitly ordered a stop to Boeing airliner deliveries. While previous conflicts were often limited to tariffs on steel or agricultural goods, this time one of the core sectors of American exports, aviation, is under direct attack. The numbers speak for themselves. By the end of last year, Boeing's order book contained approximately 4,500 aircraft, more than 1,200 of which were directly or indirectly connected to China. That's nearly one-third of all company orders. With an average price of $300 million for a wide-body aircraft and $110 million for a narrow-body jet, annual revenue from Chinese contracts brings Boeing up to $12 billion. And if we factor in long-term service and spare parts agreements, the total amount could be significantly higher. This entire volume is now at risk. Moreover, the consequences are already being felt. Within just a few days, Boeing's stock value dropped by up to 10%. Analysts agree. This is not merely a reaction to a specific decision, but a fear that this is just the beginning. The market is concerned that China may, in the long term, completely abandon Boeing in favor of Airbus or focus on developing its own domestic aviation industry, particularly the C919 project by Chinese company Comac. And here lies a double blow. Boeing loses revenue and the United States loses influence. Civil aviation is one of the most important export tools for reducing the trade deficit. According to official data, the annual export of American aviation products ranges from $130 to $140 billion. China accounts for 15 to 18% of that total. Losing even a portion of this volume would mean a shortfall of billions. Let's not forget that Boeing is not just a factory. It's an intricate supply chain of thousands of vendor companies across the United States. Engine manufacturers, landing gear producers, seat makers, electronics suppliers, all of them are tied to exports to China. If these supply chains grind to a halt, mass layoffs will be inevitable. Estimates already suggest that in the engine sector alone, up to 10,000 people could be laid off by the end of 2025. However, this step is not easy for China either. Despite its ambitions to develop domestic aircraft production and efforts to increase purchases from Airbus, the abrupt halt in Boeing orders also creates problems for Chinese airlines. Boeing models 777, 787, and 737 MAX are widely used in international flights. Replacing them on short notice will require not only the purchase of new aircraft, but also the retraining of pilots, infrastructure changes, and the creation of spare parts warehouses. These are expenses running into hundreds of millions of dollars and months of operational downtime. Nevertheless, Beijing acts on the principle, yes, we will suffer too, but the United States will suffer more. This is a strategy of mutual damage, the so-called lose-lose logic of a trade war, where no one wins, but each side hopes the opponent loses more. The Trump administration, in response, is ramping up pressure. In recent months, the United States has imposed tariffs ranging from 25% to 50% on various Chinese industrial goods, threatening to raise them to 100% on strategic items. China, in turn, is limiting purchases of agricultural products, energy resources, and now, passenger aircraft. Up to now, Boeing has signed contracts with China worth up to $160 billion. If these contracts shift to Airbus or other competitors, Boeing will face a financial drought lasting a decade. In just the past week, losses on the stock market are estimated at $15 to $20 billion. And the company has still not fully recovered from the blows of the pandemic and the 737 MAX scandal. If China does not change its position within the next 6 to 12 months, revenues from deliveries could drop by 1/4. This would be a blow to Boeing's entire ecosystem. 140,000 employees, 30,000 of whom work in the civilian sector. Each 1% drop in profit margin puts thousands of jobs at risk. What does the White House say? President Trump has accused China of sabotage and currency manipulation, emphasizing that the United States will not back down. Meanwhile, Congress is divided. Some politicians are calling for a softer stance to protect Boeing, while others support a hardline approach despite the risks. But what if Airbus officially announces new contracts with China in the coming weeks? If there is even an order for 150 aircraft, Boeing will lose the majority of the Chinese market. The company calls such a scenario its worst nightmare. And although China is developing the CR-929 project in partnership with Russia and preparing the C919 for mass production, these aircraft are not yet able to fully replace Boeing's fleet. But China is ready to wait, or even absorb losses, if it means hurting the United States more. And this is where the long game begins. Boeing lobbyists are sounding the alarm. If we lose China now, we will lose it forever. The company is warning Congress. These losses will permanently reshape the structure of the global market. Will the United States backtrack? For now, no. According to estimates, in 2024, Boeing received $7.4 billion from China. For 2025, growth was projected to reach $10 billion. Now, the risk is losing the entire amount. And if China continues to impose restrictions in other industries, chemicals, semiconductors, agribusiness, the second wave of the trade war won't be far behind. This is no longer just a clash between Boeing and Beijing. It is a full-scale economic duel between two superpowers. Some sources suggest that China is preparing to strike back in the agricultural sector if the United States imposes sanctions. This would raise domestic prices in the U.S., trigger inflation, and possibly lead to a stock market downturn. Meanwhile, Europe is watching. Airbus is already seeing a slight uptick in interest. The company's shares have risen slightly. Company officials state, "We don't want to profit from a trade war, but if orders come, we will fulfill them." Right now, Airbus has the opportunity to permanently take Boeing's place in Asia. So what do we have in the end? The United States risks losing between $10 and $12 billion annually in civil aviation. The total long-term loss could reach up to $150 billion. Boeing's market capitalization could drop by $50 billion. In addition, a wave of unemployment, job losses in every other state, and a damaged reputation. And all of this because of political decisions. We are standing at the threshold of a new era, where even civil aviation has become a weapon, where decisions about aircraft deliveries are dictated not by logistics or technology, but by diplomatic battles, where a single directive can wipe out billions and leave thousands jobless. Share your thoughts. Can Boeing still reclaim its place in China? Or has the sky been handed over to others for good?